Hello and welcome to the channel. My name is Shannon Rivkin. This week's video we'll be discussing uranium and what is behind the run in uranium stocks, and is there more to come. So just a quick chart on the uranium price. Actually, and this is just 2009, but yeah, highs of around $130 a pound back in the late 2000s. Then of course we had Fukushima around here, and then a significant period of low levels of for uranium, for the majority of that decade, as the appetite for nuclear power obviously softened considerably, and was a political pariah for a long time. And now, of course, as we've come to this point here with the global pandemic, the outlook for decarbonisation has only accelerated, and the role that that nuclear power will play as a reliable renewable energy source with next to no carbon output. The demand story looks very good, even of course with all the scary historical baggage that nuclear power has with Fukushima and Chernobyl. And I should say that it bottomed around $30 and up to a little bit over 40 now. I think it's 44. Sorry, it is 45 as of yesterday. In the meantime, here are returns for a couple of the uranium stocks here listed on the ASX. Paladin is the big name, even though it's a company that's had its project on care and maintenance basically for the entire decade previously, waiting out high uranium prices before it restarts. And basically since 2016, I probably should have gone further back here. Basically, Deep Yellow's had really good performance, but for the most part, Paladin and Boss Energy, for example, have done basically nothing until we've gotten to this point here, and then we've seen a massive buying surge lately. Okay, so what's caused this? So yes, there's no doubt that the demand outlook for uranium has improved dramatically. That corresponds, of course, with the supply picture that, as I've just said with Paladin, is complicated by the fact that we've had an extended period of low uranium prices. A lot of these companies that are sitting on promising or previously producing projects, are going to take significantly higher prices before they restart their mines or before they invest more money into these mines, and it doesn't simply happen overnight. So there will undoubtedly be a supply shortfall, and I might actually just go to the next one. This is a Paladin presentation here. There will, in my mind, be a supply shortfall, and possibly a pretty significant one. This is the line here is reactor requirements based on planned, I believe that's based on planned nuclear plants to be built, as well as existing capacity. And meanwhile, we've got the supply, which for the most part just isn't able to keep up. And that's, of course, assuming there's no increase in expectations for uranium above and beyond what's already kind of factored in with a lot of the information here. 443 reactors in operation across 33 countries, and 54 reactors under construction in 19 countries, and possibly that could increase as this decarbonisation theme accelerates. But at least in the short term, it's coincided nicely with and this certainly behind some of the buying we've done in some of these uranium names in recent times, with the beginning of the Sprott Physical Uranium Trust, which is an ETF in Canada, much like the Bitcoin ETF that kind of is attributed to some of the gains there. These guys with their ETF, they actually buy physical uranium at spot prices. And consider, if you look at the way the spot market's been over the last 10 years or so, even a lot of production companies with long-term supply contracts, rather than actually producing themselves, have largely been buying in the spot market because obviously the price has been so anemic that it's been far more commercial for them to do that rather than produce and run their own projects. And they've, for the most part, just decided to wait out a high uranium environment before restarting their projects. So if you coincide now all of a sudden a new buyer in the market that is attracting investor interest, which is in turn feeding more buying of uranium, you're having this incredible spike in uranium prices. And some may say that that's kind of artificial, and it's not actually demand for uranium that's from nuclear reactors that's causing it. That's absolutely right, but that doesn't mean that speculation can't accelerate this theme. That's probably going to have some real fundamentals behind it in the middle of this decade and towards the end. But something will start this, and perhaps this is just what's going on right now. And they've got actually the Sprott presentation has some interesting information about nuclear, and its carbon output is obviously very, very low, even below that of wind, solar, and hydro. So that's what's causing the moves in uranium prices in the short term. You're seeing kind of outsized moves from uranium or potential uranium producers such as Paladin and Boss Energy and Deep Yellow because of that incredible leverage they have to uranium prices. Many analysts out there now predicting that we'll see uranium back above US $100 a pound over the next few years. The way the price is moving, and with speculators entering the market as well through that new ETF, perhaps that could be seen even sooner, which would eventually, of course, lead to these companies restarting their production, may change the supply outlook. But, as I said, there will be a lag, and you might see uranium prices come off. But it's one of those really interesting situations where the price of uranium might accelerate well ahead of the actual demand for it, the physical demand for it for those nuclear reactors, and it's driving a really interesting market for the moment. So, we remain bullish on uranium and uranium stocks over the long term. Let's see how far they go in the short term. There'll probably be a certain point at which we'd say, enough of the upside is factored in and we can move on. But until that time comes, we're going to remain bullish. Anyway, that's it for this week's video. Thank you for tuning in. If you liked the video, please click like and subscribe, and I'll be back next week for a new video.